Good day everyone, and welcome to our latest video report. I'm Dion Zukiwsky, Branch Manager, Senior Wealth Advisor, and Portfolio Manager here again with you. And with spring around the corner, we're going to look at some interesting investment topics today. We're seeing a spring fling of positivity in the investment world. We'll also look at, hey, what to expect from here. And finally, we'll bring in Investment Associate Bond Jewell, who will give us information around tax filing, everybody's favorite time of year. So similar to the Edmonton Oilers power play, markets have been running pretty hot lately. Since the start of the year, investment markets, particularly in North America, have been on a roll. And we're going to check out some stats here. Looking at our chart, we see that in North America, the Canadian TSX Composite and the US S&P 500 have both been hitting some all-time highs recently. Here in Canada, since January, our market is up about 5.5%. Down south, the US market is closer to double digits. When we look at the bottom of the chart, looking at long-term bonds, they continue to have their struggles, although shorter-term bonds have seen better numbers recently. Overall, our models have also seen similar gains, particularly in sectors such as technology and consumer companies. In addition to the sector performance, the outlook in general has remained quite positive, with the potential for interest rate cuts coming later in 2024. And this brings us to our next topic of inflation and how it affects those interest rates. Just this past week, the US Federal Reserve elected to keep interest rates as is. However, they still plan to have about 3 cuts for the remainder of this year. The timing and amount of these cuts is still up for debate, which will of course be determined by those inflation numbers. As central banks cranked up rates around the world the past few years, we know that this was all in an effort to bring inflation under control, essentially pumping the brakes to keep the economy from overheating. The worry is that this strategy, of course, can cause an economic downturn, also known as a recession, which of course is negative for us as investors. The good news is that it appears that inflation is coming down, but the economy is hanging in there. Recession probabilities have decreased, resulting in an expected soft landing, which we'll look at next. Checking out the chart here, we're looking at inflation year over year, interest policy rate, and recession probabilities. We can see that inflation, particularly in the US and Canada, has actually come down quite a bit, almost by half of what it was at its peak. In the US, it's just over 3% year over year, and in Canada, we're actually around that 2.9% range, getting closer to the Bank of Canada's target of 2%. However, interest rates have yet to come down at all, but the good news is recession probabilities have decreased. In other words, it's looking less and less likely like there will be a recession. Not so for our friends in Europe, where some parts of Europe are actually in a decline right now. So when we switch to strategy, or what's next, the big question we've been hearing is, great job guys, but will this outperformance continue? Now with those expected interest rate declines over the next couple years, these should be tailwinds for the investment markets. There is a certain amount of expectation already built into that market direction. However, our overall plan is to maintain a lean towards growth in this part of the economic cycle. We must remember, though, that nothing moves up in a straight line, and to use a baseball analogy, it's spring training, go Blue Jays, there is the potential for curveballs later in 2024. These include delayed interest rate cuts. We have an upcoming US presidential election down south, and of course the media circus that follows that, and ongoing conflicts in Eastern Europe and the Middle East. Any one of these can, and quite potentially will, cause some short-term volatility. In fact, we do expect some bumps along the road for the remainder of this year. However, if corporate earnings can stay on track, and we see that economic soft landing, then any temporary drops in the market can be viewed as opportunities to continue to add to high-quality positions. As always, if you have questions about your wealth plan or investments in general, please give our team a call. It's our job for you. And now, with tax season around the corner, let's bring in Bond, who will go through some important items for you to know.
Tax time, everyone's favorite time of year. I'll try and keep this short and exciting. First of all, this is for informational purposes only. For your specific tax situation, please speak with your tax expert. Taxes for 2023 are due at the end of April 30th to be exact. Generally speaking, if you have a non-registered account, you will be receiving a T5 slip, which is income from individually held stocks or bonds, a T3 slip, which is income received from trusts or mutual funds, a T5008, which is a disposition of securities, and if you had held investments outside of Canada, such as Microsoft or NVIDIA, you will also be receiving a T1135. For those of you taking RIF payments, you will be receiving a T4 RIF, and for those of you who made RSP contributions, you'll receive an RSP contribution receipt. If you are set up for paperless record keeping, your tax slips will be available through the Scotia website, not the app, but the website on the right-hand side under tax documents. Just under that is another link for Secure Share. For those of you with non-registered accounts, our team has uploaded a tax package there which includes the annual fee summary, annual trading summary, and the realized gain loss report. You'll want to include that with your package to the tax preparer here as well. Also, it's important to note, you may also receive other slips from some of the investments that we held in the accounts here as well. Those would be coming by mail. CRA has a report of all the tax slips that you've been issued. You can access those by going to the CRA My account. You can also give permission to your tax preparer, and they can access those as well. If you have any questions at all, please reach out to our team and we'd be more than pleased to help. That's everything. Thanks for watching. Have a great day.